Slim's Take, Silver, Then and Now. Let's explore why silver's past blow-off isn't repeating. And what's different this time? We'll contrast 1980 speculation with what I see as today's structural revaluation. Here's the core theme: speculation then and scarcity now. In 1980, silver exploded, but it wasn't real demand. It was speculative greed, fueled by the Hunt brothers' attempt to corner the market. Today's rally? A different beast, built on structural forces that could reshape silver's role in a global economy. Keep that lens in mind as we revisit the 1980 episode. 1980, the Hunts ignited a frenzy. Prices surged on leverage and fear. The Hunt brothers engaged in a speculative attempt to corner the silver supply. Their buying frenzy triggered a retail buying panic. Prices had been ranging above and below $5 for years. But then prices spiked to $50 an ounce, fueled by leverage and greed. Believing the dollar was doomed, there was an inflation anxiety. The Hunts turned to silver as a hard money hedge, accumulated aggressively. They borrowed heavily to fund purchases, pushing silver from $6 to $50 an ounce in under a year. Think about that. There is a parallel today. The Hunts, they were defiant, eccentric, and unapologetic. They denied cornering the market, even as headlines screamed otherwise. Then huge supply came to the market, with selling everything they could. Silverware was melted, coins were dumped. Then the CFTC cracked down, and that ends the mania. The mania invited intervention anyway, and it unleashed a flood of retail supply. When rules changed, the leverage broke, and the markets cracked. The CFTC crackdown brought a silver price collapse. CFT intervention came on January 7, 1980. The Commodity Futures Trading Commission, that's the CFTC, and COMEX introduced Silver Rule 7, which severely restricted the margin buying, a direct blow to the Hunt brothers' leverage strategy. The immediate impact? The rule triggered liquidity crisis for the Hunts, who couldn't meet the margin calls. Panic spread across the futures market. On Thursday, March 27, 1980, silver, already well off the peak, plunged 50% in a single day, from $21.62 to $10.80 an ounce. In the aftermath, the Hunts faced a $1.7 billion debt, and their attempt to corner the market ended in financial ruin. The silver market was flooded with supply from panicked retail sellers. 1980 ended in that forced liquidation and collapse, a classic speculative blow-off. Today's drivers are real economy forces. Demand is up and supply is constrained. Let's take a look here. As the industrial demand surges, well, there's a lot of reasons for it. Solar energy, that's 19% of global silver demand versus just 5% back in 2014. Electric vehicles, well, they use 25 to 50 grams per vehicle. With 22 million units projected in 2025, well, that's a huge demand. And China, well, they represent 50% of that. AI and 5G, silver's unmatched conductivity powers. For data centers, next generation electronics, there is so much that uses silver that these industrial demands are really surging. At the same time, there is a mine supply stagnation. Global mine output up just 0.9% in 2024, despite much higher prices. They're expected to be flat for 2025, and there are no new major projects in sight. And there are geopolitical risks in Mexico and Peru, which constrain growth. Inventory migration. Well, COMEX inventories rising modestly as delivery pressures build. In other words, there's so many of these, paper, silver that are traded, and a lot of delivery being taken. So they're building inventories. They're only rising modestly, but there's huge demand. London vaults, they're down to zero since 2020. That signals physical depletion. And Asia migration, as we see a lot of buying from those Asian countries. Retail behavior, unlike 1980, retail investors are hoarding, not liquidating. Physical silver demand remains strong as dealers report persistent demand. Dealer supplies are low, and global shortages projected by 1930. Now, if anybody's out there buying physical silver, I do. You can see that there are premiums on the silver, and a lot of different types of silver are very hard to buy. This isn't panic buying. It's persistent consumption meeting limited growth. That certainly is a different picture than we saw back in 1980. This side-by-side look shows the differences, and they are decisive, as you can see, as we compare 1980 to 2025 in the snapshot comparisons. You can see in here the price driver, speculation and Hunt Brothers greed. Now there's industrial demand. Retail supply, there was massive liquidations of silverware and coins. And now there's minimal retail selling and, if anything, very consistently hoarding. The modern day word is stacking. Market structure, 1980, they tried to corner the market. Now paper derivatives dominate. The difference between that market structure is just stark. Inventory trends, supply flooded in back then. Now, COMEX is rising based on their need to deliver, and there's no silver in London. Demand composition, the demand came from monetary speculation. Now it's green tech and industrial, which is growing. Regulatory impact, the CFTC crushed speculation back then. Now regulatory shifts are stressing the ability to deliver because that's where the demand is. And that means that the COMEX and other places that stock silver, they have to keep supply for that big demand that we see. Now, as you can see here, every row points to scarcity and utility, not a corner, not a bubble. Valuation really depends on where you anchor the measurement from. This is a very, very interesting slide that we look at. If you measure silver versus inflation, silver may be cheap, maybe not. That depends on the date from where you measure it. As you can see here from the 1978 baseline, before the Hunt's plan, silver prices averaged during that time about $5.40 an ounce. So at $5.40 an ounce, inflation adjusted, that would be, in 2025, $26.9 per ounce, $26.90 an ounce. But today's silver price is $44 an ounce. So silver has outpaced inflation since the late 70s, using that baseline. Now you could look at this and say, maybe that is bubble territory. But then, when you think about that, the demand for silver right now is really pushing silver up, and it's based on a lot of important reasons that we just said. If you measure the value of silver versus the speculative peak just before the Hunt debacle, the Hunt Brothers peak was $50 an ounce. Inflation adjusted to 2025, that's $209 an ounce. Today's silver price, $44 an ounce. So based on that measurement, and if you're basing it on that and what a bubble actually looks like, well, silver remains far below the inflation-adjusted bubble high. That's really an important comparison when you look at that. So, what does the evidence say? Well, I think that, looking at these numbers, silver has beaten the 70s baseline, but sits below the 1980 inflation-adjusted peak. Important numbers when you look at that. So what would a bubble really look like in today's dollars? We're not even close to that right now. So what does the evidence say? Silver has outpaced inflation since the 1970s baseline. Silver is still far below its inflation-adjusted 1980 peak. Today's rally is built on structural scarcity and industrial demand, not speculation. Industrial demand from solar, EVs, AI is surging. Mine supply is stagnant, with no major new projects, and inventories are migrating and depleting, especially from London. Retail behavior is the opposite of 1980, when households liquidated. Today, investors are hoarding. Silver is a much different commodity than it was back in the 1970s. This is not a speculative climax. It's a secular revaluation. The secular revaluation driven by scarcity and industrial demand. This is the silver monthly chart. Now, I showed some variations of this in the past, and we're going to just look at this quickly. I have another video out on YouTube if you want to look at it, and I take it into detail. And this is for the cycle picture, which adds technical confirmation to the story I just gave you. You can see in here that we are cycle analysts, and these semicircles on the bottom show us the rhythms in the market. You can see there are beautiful rhythms in the market. This cycle right over here and this cycle right over here have been pushing the price up, and our momentum indicators keep going up. Now, in each of these corrective periods where the cycles are coming down and you see those corrections, you get pretty good pullbacks. Now, with silver up near $44.5, well, $45.5 to $47.5 is some pretty good resistance areas. And of course, that all-time high, that red line up near $50 right over there. The silver market could continue to push up right now. But what we're looking at is the potential for a corrective period right over here into this late 2025 or early 2026 period. So some point in here we're going to get a peak, and then after that, you can see the note here, all metals in this period are likely to have a surge. 2026 and 2027 as these cycles over here rise right over there. Then there'll be maybe a bigger correction that takes you way out into 2029 or 2030. But in the meantime, we're entering into a period of a minor corrective period, and what I think is a very good buying opportunity. Right now, probably under about $38 if that were to happen. But I wanted to show you the monthly chart as it lines up with the story that I'm telling you right now in the silver market. Current cycles align with the fundamental story, supporting a sustained advance, and that advance very likely coming out over here in 2026 and 2027 after some modest pullback that we see happening right there over just the next few months. If you want to go deeper, we've built the tools and the workshops. This is a new video category with me taking a deeper dive into widely watched markets and current subjects in the financial markets. If you want more, let us know. Send your comments to team@AskSlim.com. If you want info on our cycle analysis that I showed you, well, you can learn by taking our workshop, or you can get some free information that we have. Just go to AskSlim.com, to the Workshops tab on the top, to the Cycle Analysis Workshop, and there's a free video on there for you to watch and some other information. Info on our memberships at AskSlim.com. Well, go to our website, and you can see what we have there. If you want to check on our specials, you can write to Matt at AskSlim.com, or on the bottom right of the page, Ask Slim AI. Join us to learn cycle analysis, and then you can apply it across all markets. A quick reminder on how to use this information, and that what we are not giving you is any trading advice. Everything about what we're bringing you is about you using it with your own trading plan and consulting a financial professional. Thanks again for watching. I hope you loved this style of video.